but basically 9 out of 18 of the Fed members that put their dot on, basically, suggested at least one hike by the end of 2026 now. And so we have a lot to drill into with the first decision and press conference under Fed Chair Warsh here kicking us off this week. We are primarily going to cover the Fed decision and press conference that followed because there's so much to unpack. But we also did get retail sales, so we'll touch on that as well. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal every week is to leave you feeling more empowered and bring to you some of the market news, data, trends we're watching. And again, primarily this week, if not almost entirely, we're going to be focused on the Fed and the press conference from Fed Chair Warsh there, because there's so much to cover. And of course, this is the first press conference under Fed Chair Warsh, and set the tone a little bit for what we can expect for the rest of the year and the length of his term. So before I get into that, there is one data point I want to touch on. So we did also get retail sales out this week. Retail sales were up 0.9%. So that was a good sign of still a very strong consumer. This was higher than expectations, a huge number in general, and this just remains to be the theme as far as retail sales go. So very strong number there. But with that, let's go ahead and jump into the meat of it. And basically, we're going to cover Fed from A to Z here today. We'll kind of tie this in as our question of the week because there's so much to cover. So basically, what we had is yesterday on Wednesday, we had the Fed decision come out, and then of course the press conference to follow, where Fed Chair Warsh really got to share his perspective and kind of set the tone, I guess, for what we can expect from him anyways moving forward. Maybe let me touch on the decision to start. Basically, the decision to start was no change in rates. No surprise there. I don't think many, if any, really expected a change in rates for this first meeting, which is exactly where we landed. So no change in rates at the moment. But the statement that came along with it, I think, is really important. Basically, a very big focus on price stability, which I'll unpack here in a minute. In other words, inflation. That's the simple way to put it. And for what it's worth, under Fed Chair Warsh, it seems like his focus is to try and reduce the noise in some of the statement that's out there and just really shorten it up. That said, there was a lot in the press conference, so maybe a bit of a conflicting perspective there, but nonetheless, that's supposed to be the goal there with the statement and I think the press conference too. So the biggest thing I want to touch on is this statement that came out with this idea of the committee will deliver price stability. What I would share is that there was basically, it's important to note, there was no balance of risk in this statement. So the Fed's dual mandate being price stability, inflation, and basically the labor market, jobs, right? There was no mention in there specifically of jobs. Now, clearly, just to be clear, I don't think that means it's not important, but it is very obvious that they are going to be focused on inflation and trying to get that down. And maybe even, well, let's say clearly above and beyond jobs, but maybe even despite what it could mean to jobs. Now, time will tell as time goes on if we see the job market cracking. Obviously they may pivot, but that was very clearly the message this go around was they're going to focus on price stability, inflation, and that is the thing that they're focused on at the moment. I will also share, it was very clear that he suggested that they want to see a 2% inflation rate. We've heard that from Fed Chair Powell for years. Obviously, you might remember the word transitory. We still have a little, a little bit of PTSD coming back from that word over the years. But basically, that's been the theme forever. However, I think under Fed Chair Powell, there was this idea that 2% was the target, but in reality, they'd be happy at closer to 3%. It seems from this conversation that they're probably not okay with slightly higher. Basically, 2% seems to be really their target, or at least that's what's being communicated. The big news as well is that if you looked at the dot plot, there was 1 or 2 hikes that now seem to be the theme for 2026. Will we see that take place? Hard to say. But basically 9 out of 18 of the Fed members that put their dot on, basically, suggested at least one hike by the end of 2026 now. And we're already mid-June, so we're already halfway through the year. So that's not, that's not too far down the road here if that is actually the direction that ends up being taken. Based on all this, yesterday what we saw was stocks were down slightly, yields were up slightly, gold was down slightly, actually a good amount. Now, that said, the reaction in the stock market really wasn't that strong. It was down slightly, but really not all that much given the news and the big shift until the end of the day. End of the day, it seemed like the markets took it a little more seriously and reacted a little more harshly to it, but still, all in all, not too terrible. Or at least I should say not too terrible given the news. The other thing to mention is that there was also a lot of talks around this task force. It was probably like the big word or the big term for the day. They're creating 5 task force. I believe they're Fed communications, Fed balance sheet, data gathering, productivity and jobs, and then I believe inflation frameworks. So basically, they're trying to break this up a little bit and make sure that there's maybe more focus or data that they can analyze in those areas. What that means in terms of actual policy change, hard to say, but it will be very interesting to see. What I will mention is that even with all this going on, with the press conference, with the statement, everything, I didn't hear much really about, I mean, obviously the dot plot suggested where rates may go, but there really wasn't a whole lot of talk about rates and or the balance sheet specifically. So I am interested in where, the Fed and Fed Chair Warsh take this. Obviously, inflation being a huge factor that they want to reduce, and price stability being the main focus. But again, they do have more tools than just the interest rate. And so I'm hoping maybe as time goes on, we get a little more clarity on what that means and what tools they might be exploring to make that happen. Again, keep in mind, though, 9 out of the 18 that voted did suggest that they expect a hike by the end of the year. All in all, again, we fast forward to today, Thursday. Markets shrugging it off this morning. There is some news on potential peace in Iran, and obviously that is lifting the markets a bit. But it basically, all in all, markets shrugging off the news quite a bit in general. Be sure to tune in next week. Keep in mind, tomorrow markets are closed for the holiday, so we do have a longer weekend, shorter week this week of trading, with today being the last day. But next week we have income, spending, and inflation data all on Thursday. So we got a lot to cover on Thursday there next week. We'll be right back, same place, same time, 3 o'clock next Thursday. In the meantime, if you have tomorrow off, enjoy your long weekend. Either way, enjoy the weekend, and we will see you next Thursday at 3.